Good morning. This is Sheldon from the Currency Advisory Desk. Yesterday, we saw Mr. Mario Draghi, the president of the ECB, coming out with his statement, wherein there was no indication of any further interest rate cuts that the ECB would offer. So, the action that came out was pretty much, he said that, the markets would be positive, and he's expecting the Eurozone to move towards a more positive scenario, a positive place from here. But we don't seem to be having the fundamental data which is supporting, his statements. If we see the Eurozone, it's a financial mess that's there actually. There's nothing much that's coming out which is positive for the Eurozone at present. Also, if we look at the US data, we are getting a lot of mixed data that is coming out in the recent past few days. Yesterday, the ISM non-manufacturing PMI which came out, it decreased to 53.5 levels compared to a forecast of around 55.5 levels. Now we are observing this pattern continues for all the past 3 to 4 days, that the data which is coming out is not supportive, neither is it against the US economy. We are getting a lot of mixed signals from the US economy as such. Overall, if we see, our view is that the global economy is shrinking. If we talk about countries like Australia, we can see that the RBA, the Reserve Bank of Australia, also has cut the full year growth, the growth forecast what they have cut it down, and they are moving towards a more safer stance rather than going aggressive, because we have seen that China itself is moving towards a more trade deficit kind of a situation compared to the huge trade surpluses that the Chinese economy had earlier. We also see that people are talking about hard landing in China, about the Chinese economy having a hard landing, and this is such the investor sentiment is being affected by all these news. And most of the Eurozone, also the EU countries which are there, they are at present running in a recession or going towards a recessionary phase as such. So it's more of you could say bearish news that's coming out from everywhere. Even if you look at the political scenario in the Eurozone, with the elections happening and people talking about more austerity measures, the hopeful candidates who are coming up, they are talking about more austerity, more cuts. So there's nothing much that's fueling growth at this point of time. Also, if we look back at our own economy itself, we are in a political paralysis kind of a situation, because we see that there's no positive news, or there's no news which is coming out from the government which is supportive for the economy. So all these factors, they're taking a toll on the Indian rupee. Now if I talk about India itself, the issues we have is the GAR, the GAR concept has to be cleared, without which no FII or FDI would want to invest further unless they get a clear picture on this particular matter that the government has brought up with the taxation treaty matter that has come up. So we need to have some clear vision or some clear direction from government, from the RBI, to curtail the movement of the dollar, because we have seen now dollar is appreciating. It's gone to around 54 point. If I talk about futures, it's gone to around 54 levels today itself. It has crossed 54 levels, the May contract that is there. So in order to curtail this, we are not getting any sort of support from the government or from the RBI. We are not seeing any RBI intervention, though there is talk about RBI intervening in the market, but it's not actually showing up. So we need to have clarifications on all these issues. And also our balance of payments, it's in a toss right now. If I see that we are the only BRIC country which is running such a huge trade deficit. Now if the oil prices do spike up, or if they go up, we are going to be in a greater mess than we are right now, because what's going to happen is that if oil prices go up, the dollar demand from importers will definitely increase. This will put further pressure. It will fall down to very drastic levels. So yes, we are bullish on the dollar as compared to the rupee, and we are, globally also we are not seeing any positive or any good news which can support the growth of economies as such. Moving forward to the technical levels for today, the dollar May futures, as I was telling you, is trading presently at around 54.01 levels. The US dollar in spot market, we see that it has a spot support of around 52.84 on the downside to 52.48 levels, and on the resistance on the upside we see that it's around 53.80 to 54.32 levels. Now the trend of the dollar is bullish as compared to the rupee. If I look at the euro has seen a support of around 69.40 levels on the downside, and the resistances we see is at around 71.27 levels on the upside. Moving to the pound spot also sees a support of around 85.45 levels on the downside, and a resistance of around 88 levels on the upper side. Trend for the pound, yes, the pound is bullish. This is mainly because of the dollar being bullish. Otherwise, we don't see any much positive news or any supporting data in the UK economy as such. But just because of the cross currency rate, the pound is holding on to its present levels. The Japanese markets, well, they were closed yesterday. They are closed today and tomorrow as well. So there's not much direction coming up from, no much news flow coming out from the Japanese markets. However, we see that in the spot, the yen holds a support of at around 65.84 levels, and we see a resistance at around 68 levels for the yen. Trend for the yen is bullish in the intermediate term. Well, that's it for now. Thank you.